All right, let's talk about a concept that can seriously change the way you see the charts: ICT Daily Bias. We're going to break down how you can start to anticipate the market's daily script before the action even begins. You ever have those days where you feel like you're just caught in the noise? You get stopped out by these sudden, sharp reversals, and you're just left scratching your head? Well, if you're struggling with that kind of inconsistency, you're not alone. And chances are, you're probably missing one critical piece of the puzzle. And that missing piece is understanding daily bias. Now look, this isn't just another flashy indicator you slap on your chart. It's a whole framework for reading the story the market is trying to tell you each day. It's about aligning your trades with the big money, the institutional flow, so you can trade with them, not against them. Okay, so let's really get into it, because a lot of traders, a lot, get the core idea of daily bias completely wrong. And you know what? That one misunderstanding can be the reason so many trades fail right from the start.
So what is it, really? In the simplest terms, it's just forming an educated guess, an opinion, on whether the market is likely to head up or down for the day. But here's the key. It's the how and the why behind that guess that makes all the difference.
And this right here, this is the huge misunderstanding I was talking about. Having a daily bias is not about being some kind of fortune teller who predicts if the daily candle will close green or red. No way. Instead, I want you to think of yourself as a detective. Your real job is to figure out where the smart money is going to push the price. Why? Because they need to hunt for liquidity, those huge pools of buy and sell orders, so they can fill their massive positions. And that hunt for liquidity, that's what fuels their real, intended move for the day. So, if that's the goal, how do we actually do it? How do we figure this stuff out systematically? Well, we can break it all down into a really simple, memorable framework. Let's call it the 3 pillars. Now, these 3 pillars aren't just separate ideas. They all work together. They build on each other, one by one, to create a really high probability case for the day's likely direction. It gives you a clear script to follow. So, pillar number 1 is the trend. And this all starts on the daily chart. This is our foundation because this is the time frame the big institutional players use to plan their campaigns. We're just asking a simple question. Is the market making higher highs and higher lows? That's bullish. Or is it making lower highs and lower lows? That's bearish. We're looking to see where the price is respecting key levels, things like order blocks and fair value gaps. At the end of the day, we just want to be on the same side of the market as them. Okay, once we have the overall trend, we move on to pillar 2, the magnets. You see, price doesn't just wander around randomly. It's pulled, like a magnet, toward liquidity. There are 2 main types. You've got external liquidity, which are those obvious pools of stop-loss orders sitting just above old highs and below old lows. And then you've got internal liquidity, which are those market imbalances, the fair value gaps we talked about, that act like little vacuums just waiting to be filled. Both of these are powerful magnets, telling us where the price is probably headed next. And finally, with our big picture trend and our liquidity magnets all mapped out, we start looking for today's clues. Pillar 3, the previous day's high and low. That's an incredibly powerful guide. And the Asian trading session? Oh, it's notorious for setting a trap. It often fakes a move one way just to grab liquidity before revealing its true intention for the London and New York sessions. It's a major clue. All right, so how do we actually turn all this detective work into an actionable trade plan? Because let's be honest, amazing analysis doesn't mean a thing if you can't use it to execute a disciplined trade. So let's build the playbook. The whole process is really systematic, and you gotta be patient. First, you use the 3 pillars to lock in your bias for the day. Then you mark your key zones, and you wait. You let the price come to you. You don't chase it. Once it hits your level, you look for a specific confirmation signal, something like a market structure shift, which is really just a clear break of a recent swing point on a smaller chart, and only then do you put any capital at risk. So it all boils down to this, and this is so crucial. If your bias is bullish, you're not buying breakouts. You are patiently waiting for the price to dip down to a discount level, your point of interest, so you can buy low. And if your bias is bearish, you're waiting for a rally up to a premium price so you can sell high. It really is that simple. You're just applying that classic wisdom within the context of your daily bias. So what's the big takeaway here? Why does mastering daily bias really matter so much when you're in the trenches trading day to day? Well, it fundamentally changes your entire approach. You stop being a reactive guesser and you become a proactive anticipator. It gives you so much clarity in a sea of market noise. It gives you the confidence that you're trading with the big players, not against them, and it gives you the discipline to stop overtrading. Honestly, it's the framework that holds your entire strategy together. It's like one of our sources put it so perfectly. This isn't just another tool you add to your toolbox. It is the foundation. It's the cornerstone upon which a consistent, logical, and repeatable trading strategy is built. So the next time you open up your charts, don't just ask yourself, where's the market going? Instead, ask yourself, what's the trend? Where are the magnets? And what clues is today's price action giving me? Stop guessing and start building your bias one pillar at a time.